Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see. Tune on, tune in, connect up. Let's see, where's that button at? There it is. What garbage is this? There we go. There we go. There we now we see it. And let's kill that volume a little bit. There we now we see it. Hey Robin, how you doing this morning? Everything come through AO of K? Oh, let's see. You needed a euro this morning? We'll have to check that out too. I don't think I have the data on that, but you can drag it off of number 17, I think it is. Number 17 has it. Z's. I hear you. I hope you had a good night's rest. So there we are. Let's see what we got going on. You can see this is the dollar index on a daily basis. And again, the dollar is doing what we expect it to do, and that is go down. Go down. Down and down and down she goes, all right down. Always just waiting for the CPI. You know, Janos, yesterday somebody put out a chart. Let's see if I can find it. That had been enormously accurate on predicting the CPI. Let's see if we can find it here. It was on Zero Hedge, and they started that chart was like posted somewhere around I guess about 3 or 4 hours. Oh, what is there? Credit Suisse considers 50% cut to bonus pool. Okay. Credit Suisse is still cleaning itself up nicely, it seems like to me. But anyway, they said that this particular indicator is constantly right, and so that I think that gave the energy to the market, and I think it's in the market already. The CPI, I guess, when it finally comes out, you know, in other words, when the CPI comes out, you know, within an hour, then what'll happen is the markets will respond. There it is. Flawless indicator signals big CPI miss tomorrow. Let's see if we can get it up on the screen here for you. Let's see. How do we do this? We go backwards on that again. I'm gonna have to bring the whole thing over. Because there it is right there. It's the flawless indicator signal signals big CPI miss tomorrow. That one right there, and it shows here this yellow line right. Is the arrow working there? Yeah, I guess it is. There it is. The arrow right there. It's showing you this big, and that's the indicator itself, and then the blue is the actual. So the market's got, I guess that came out in late afternoon, and it started to lift it. They started lifting the market more. So I'm figuring that what'll happen is we will see the market lift after the news, which we'll do the webinar right into the news, so we'll see how it goes there. But I thought that was interesting. So, anyhow, that's where we are. The dollar index. Let's see, where's the dollar index over here? Right there. Let's find the dollar index on Chicago Quant. But I'm sure it's doing the same exact thing as you see on J4X. It's going down, losing value. You see it there. We're at the bottom end of the range. Same thing over here, bottom end of the range. You can see in this case here with the stochastic, you see the green line trying to turn. Our green line on a daily is doing the same thing right there. Don't think there's that much of a bounce. All I see is, at least in my head, I kind of think of it as just a slow and steady grind of, the dollar moving sideways to down. Then you get your dead cat bounces, where profit takers come in, they take some profits, and then boom, right back down again. All right, there's a little sip of the tea there. So yeah, it'll be interesting. In 53 minutes, in 53 minutes, we will see what is going on with the CPI, and everybody's expecting it to be. I guess the anticipation is 6.5. I'm hearing it's going to be 6.2. Can you imagine if it actually breaks the sixes and goes into the fives? It'll be like watching an Elon Musk rocket ship taking off, and with the capabilities of landing without blowing itself up. All right, let's go over to. I guess we take a look at the euro and see what the euro is up to this morning. Euro on the wall. And there it is. Right there. Let's see, there we are. And you see there the euro has been marching up exactly the way the dollar index is going down. This thing goes up. And that's the way it's supposed to be. And let's take a peek at it right over in here. Let's see how the euro is looking this morning over here. There you go. See that strength in there? And we are getting a curving here. That's interesting. Nothing major, of course, but enough to pay attention to it. But the weekly is so far off and looking very strong, it doesn't really matter. You can see over here on J4X, we are at the top end of the range. And, it's basically trying to tell us the same thing this dashed line down is doing as we speak. That is that there's some pressure. You can see over the last, 3 days there, it's done nothing. It's been very sideways, very inconsistent, consistently quiet. Maybe they've been just waiting for the CPI. When it comes to the fundamentals and fair value, a lot of this stuff just goes kind of slow and steady, and there's not a lot of ever since 2008 our whole marketplace is let me digress. In other words, let me go back a little bit and have just a simple little conversation. Nothing deep, not as crazy as Monday, but there's a lot of rules and ideas and techniques and so forth that have been talked about for many decades. 10 years is a decade. So, many decades back, and they follow them like Graham or, modern day, what's his name, the Berkshire Hathaway fellow. I'm trying to think what his name is. Warren Buffett, that's it. And, there's these concepts of investing, techniques of investing and, looking for value, that type of thing. And then what you get is that, quantitative easing is created in 2008, right around the election of Mr. Obama, within weeks of his election. They create the QE, and what you get from there is you get fundamentals are kind of removed from the decision-making process, as much as they're quoted constantly to this day. But quantitative easing is pretty much the power behind all the moves at this point. I mean, you get your individual moves in a stock or a product, a metals or an oil or something like that. You get some market forces having influence, but market forces have diminished solely because QE is the market force now. In other words, it used to be the money managers, and it used to be the decision making of fundamentals, things like that. They were the market forces up until 2008, to the end of later part of 2008. And then after that, with quantitative easing is the market force now, and everything else is a secondary product of it. It has no. It's not the leader anymore. In other words, how like in the Market Technicians Association will say, stochastics is a lagging indicator, and MACD is a leading indicator. Things like that. They have their opinion on which one leads and which one follows. In this case here, the QE is the leading indicator. and the fundamentals are lagging indicators now. And then there's obviously, in economics, there is lagging indicators and there's leading indicators. And that, when you take apart economics itself, the concept. So when we look at this and we see, the euro going kind of sideways up for the last 3 days, there isn't a lot of action and volume. The volume has been diminished dramatically over the last over the last 14, is it 14 years now? 15 years now. Now we're in 23. So ever since 2008, it's a whole different, what drives a market, what gives markets energy is not the same as what a lot of people sell books about today, or they talk about, and they say, this is how I made my money, blah, blah, blah. And, now, you have that. Robin and I wrote an article about that, proactive versus reactive. We came from a reactive universe where orders and money managers were battling with each other, trying to be the best. And, when you now look historically, money managers, have been losing a lot of money over the decades, and the hedge funds have been getting beat up over the decades. Over this 14 years, they're not doing very well because the fundamentals that they live by in their decision-making process is pretty much a lagging indicator now. And I think that's a perfect way to describe what we're looking at right here. So let's see if we can put a little box up there. You see the gap up on the euro right there. Let's see if we can do this. And you see the gap up, but to a great extent, there's nothing more going on than looking for, direction. The product is not going anywhere. Like, it, gaps up for 2 days. I think that was the good news last week that did it. And then we sit there, and we sit there and wait for the next good news. And the good news or the indicators of information that decision making is allegedly or is supposed to be followed by is not necessarily the best, And so that's how it all plays out again. And that's the that is the answer to it all in the end. So, just thought I'd bring that out. It seems to me to be well worth discussing, I guess you could say. And that's the answer to it all. All right. So that's why it's sitting there kind of sideways into that action. And I would imagine most of the products are doing the same thing. When we go over and look at, say, the cable. And there is the cable right there. The cable's, you can see it right there very clearly with the hinkies even. It's tight, very tight in there. And when we go over to here and we look at it right there, you see that same action. It's just sitting around waiting for this information coming out. And then the markets will try, to, make a financial decision on how to invest. That's pretty much what it comes down to. I know it sounds a little complicated, but it's not complicated at all. They're just waiting, and until they get that news. Remember, let me something I'm always saying to everybody here, and sometimes people, probably people look at it and they go, well, what's he talking about really? And what it comes down to is money. When people run a hedge fund or a mutual fund or a retirement fund or any of these type of funds, what they are is they're incorporated. They're a business. And when you incorporate a business, you have to write up a manifesto of what you're going to do with the investor's money. And that manifesto, it's the rules and regs in a sense. You invent your own rules and regulations. And then you go to investors and you say, hey, I'm starting a fund, and this is how we're going to invest. And then they read it, and they say, okay, cool. I think I'll put some money in. Or, no, that sounds stupid. I'm not putting money in it. And then when it's established, then the managers who manage, the traders / managers, decision makers of the fund have to follow their manifesto to like 95% of the time. They have to follow it. There's like 4 or 5% wiggle room, and that wiggle room is what the Federal Reserve is manipulating. So it keeps the funds, what they refer to, is stable. And so if they don't, let's say you're a money manager and you only follow your manifesto like 50% of the time, you will get sued by the investors. Now, let's say you're making money. You still will get sued by your investors because it's easier to make money suing somebody than trading. And so, here you have a fund. Let's say they're a really good fund, but they keep on breaking their manifesto, not following it. They'll get sued. And they'll have to pay money to the investors, even if they're making money. Now, they could be, imagine if you're following your manifesto 100% of the time and losing money, you won't be sued. Talk about a world upside down. And so that's what's going on right there. That you can literally see what's going on. After the good news of last week, the market just sat there. It just sits there. Just wait for the next news. And their manifesto tells them, what to do when that news comes out in, 41 minutes from now. When that news comes out, money managers have to make a move with their portfolio because it's in the manifesto. They always incorporate things like CPI and PPI and inflation overall, GDP, interest rates, return of value, fair value concepts like if the 5-year is trading over the 3-year, great. If it's trading underneath it, it's a contango, then you can't invest a certain way. You must buy some gold, or if it's trading the reverse, you need to sell some of your inflation hedge, gold or silver or whatever you have written into your manifesto. And that's how that whole thing works. And I know we talk about it here, but today maybe I might be saying it a little bit more intelligently than I usually do. Just trying to explain why we see these products get up to a position after having such amount of energy. Let's just widen this out a little bit more like that. I mean, look at the energy this thing had. How does it take off? Matter of fact, the day before they nailed it, they knocked it down. Concerned, and we were in a daily sell for 3 days, and it stayed sideways down. Then the news comes out, and it pops up, and then sits there all this week, waiting, just waiting. On Monday, they take it up. And then by most of the end of the day, they start to bring it back down again. The next day, they do bring it down. Next day, yesterday, sideways action. What is that? There's the 12th. And so, in other words, it's just they're just following the rules that what they incorporated. And if they don't, they'll get sued. So that's why you have 99% or 98% of all hedge funds in the world following the same direction. Same thing with the mutual funds and the retirement funds and so forth and so on. So, anyhow, that is explaining that sideways plateau there. All right, let's jump over to the Swiss. That news on the Credit Suisse we saw when we were looking at that indicator about what CPI is going to do. Showed that Credit Suisse situation. You see here it's losing a little value against the dollar. It's working in opposite direction of the euro. Let's go back to the euro real quick. See, the euro has been going up against the dollar, in other words, making money. Now, today it's down a little bit right there, nothing major. And then when you go over to the Swiss, yesterday, if it was moving in the same direction as the euro or the British pound, you wouldn't have this up day there and getting it going into a buy. Whereas we're not in if the inverse relationship would occur, let's see, there's a sell. That's the buy right there. Like the euro is in a buy for 4 days. Let's just take a quick look at it again. Or we'll look at it here in the dark. We have it, the dark one right there. And where is it at? It's down a little bit lower, and there it is right there. There's the euro, and it is in a daily buy for, what is that, 5 full days now. This is the 5th day. Whereas when we go and look at the Swiss right now, all of a sudden it's breaking away again. It's, it's having those issues all over again. Let's go back to the euro. It started yesterday. We'll see what it does. But in other words, if this was following the same path as the euro right now, this would not have happened. It would be going lower. Instead, it popped. And you can see here we're flirting. Matter of fact, we are, as we speak, it is actually plus. Right there. You can see it right there on the number itself. You see how it's a plus at the moment, just above the 0 line. It is flirting with the weekly buy right there. Whereas the euro doesn't really, is not paying attention to it whatsoever. Let's go over to that again. The euro. Use the euro as an example. The euro is in a weekly buy. Let's contract that so you can see all of it. Now, a weekly buy from back in here at the all-time lows. So we're in that weekly buy for months now, since September. Is that September? Yeah, that's October, mid-October. And so, it's moving along, kind of bullishly. In other words, it's strong against the dollar. We're seeing the Swiss vacillate, go back and forth, strong, weak, strong, weak. And we've had a great move, too, when you really look at the Swiss. I mean, the Swiss has come down from 101 to 92. Was it 92? I think it was. Yeah. I mean, we've come down from 101 up in here to 92 since we went into that weekly sell right in this week in here. So, maybe it's a little dead cat bounce. Maybe they're taking little profits. Maybe they're anticipating that the inflation is dropping. So they're selling Swiss and buying dollars. That could be part of it. All right. And then we go over to the yen. Let's see what's going on with Mr. and Mrs. Yen. Where are we at? Oh, let's put it up on J4X too. I just want to see what the Swiss looks like on 4X. Right there. There we go. Yeah, they're pushing it. And the lines are jumping through, and we're having that same situation right there with the Swiss. Same thing. And then we can take a quick look at weekly and see if the weekly is above yet. Turn to green. Green, green, green. Yep. No, it hasn't turned green yet. Still red. All right, but you can see the green line has turned up over the last 4 weeks, 5 weeks, something like that. It's been trying to turn up. Our green line right here has been in the minus, but coming off of the lows. Doing the same thing, coming off lows, and now it's piercing. It's giving you the warning sign that we're flirting with the weekly buy. In other words, the overall trend since the 101 area and all the way down to 92, and is now starting to do a little turn there, a little turnaround. All right, we're 34 minutes away from the big news, the really, really big news. All right, from there we go over to the yen. We'll put it up on J4X. Right there. And there's the weekly. There we are. And you see we did the same thing as the Swiss yesterday. We turned up, went into the buy right there. We can get rid of that and put it in the appropriate spot. And so we went into the daily buy on an daily basis, right there, and we're already rolling over. It's already turning around and heading back down again, whereas the weekly is not. It's doing the same thing as the yen. I'm sorry, yeah, doing the same thing as the euro. So you can see there, and you can see the number is minus 16 right there. Seeing that pressure on it, and we've seen that analogous or that equal action between the Swiss the yen, and it seems to be just a little dead cat bounce going on, or maybe the Swiss Credit Suisse situation this morning. That headline might be putting some pressure on it, something like that. One thing is definitely for sure, and that is that the yen and the Swiss broke away from the rest of the currency pairs compared to with the dollar. It was interesting. I'm just assuming because of the way that the Japanese invest, it wouldn't be surprising if they were heavily involved in Switzerland's into Credit Suisse. That would not surprise me any. All right, now from there, let's see, and that's what the weekly. So let's look at the daily. Yeah, that's just gliding down with no problem. Let's take a look at the daily. And there's the daily. Went into the buy yesterday, and now it's rolling back over again. You can see it's been in the sell with that, or basically do nothing type of situation right here. The pressure's been on the downside, and of course you can see it pushing like that, and that was just the 1 day anomaly. Same situation as we widen that out a little bit more. Interesting. Even the fast, that's what the little blue dotted line is the fast, which I follow and trust a lot, is not able to get going to the plus. Let's just see if there's a blue for the Swiss. I'm not sure if I'm running that same thing on it. Yeah, there it is. And they were both interacting together. Let's widen that out a little bit more. Yeah. Just push. They're both above the zero line together. There we are. All right. From the yen, we go over to the Turkish lira. Let's see what the Turkish lira is up to. There is the euro Turkish lira, dipping a little bit today. Had some, look at that same type of energy right there. In that weekly buy for a while now. Since the mid-October stuff, we've gone from the low 17, 16, what's that, 16 and change, 55, all the way up to 20 since the weekly buy there. And then let's check it out over here. Right there. There we are. You see that strength on that. And this is the daily. And like I said, we're just rolling over. Let's see. Just rolling over a little bit here. As you can see it right there. Just rolling over, and the line has broken down. The reason why we don't have a... see the little green dot right there? That's why we don't have a sell there, because it was a volatility day. Boy, yeah, it was volatile, all right. A range between 1991 and 2032. It's an action-packed day there. All right. From there, we slide over to two currencies that we always did. The key word there is did enjoy. Not as much complaining about the Canadian U.S. dollar pairs trade. That's okay. The one that's really disturbing me is the yen, not the yen, the South African rand against gold. That one's gotten really sloppy because of all the political noise down there. So, we watch it every day, but, we're disappointed that the politics has gotten so thick that it's disturbing the process. Our math is is doing okay. I'm not complaining that, but it's always nice to see the product follow along its pathway naturally. Now you can see here yesterday it did not get into a buy, but it gave us a little volatility signal. This is the Canadian, and let's put gas up on the tape here on J4X. Let's put it in. Where is it at? Right there, and there is light. Oh wow, what did I? Is that upward light? 72. I thought it was trading in the 76 area or something like that. Let's just double check. Oh, that's a week. No, that's daily. Something seems odd about that. Yeah, we're at 78.56. Maybe they've. I'm not sure what's going on there. Oh yeah, there it is. Now it's straightened out. 78.57. 58 now. Now it's doing it. Okay, the numbers were just a little skewed there for a little bit. And you can see the strength in that. And so when you have this type of strength in the energy sector, you get weakness in the Canadian. I'm sorry, you get strength in the Canadian. The dollar, U.S. dollar, weakens against the Canadian. So there it is, right there. You see, when the Canadian goes down, that means that it's gaining against the dollar. There are less Canadian dollars or cents to buy, that type of thing. And then we switch it. We slide over to the South African Rand, and we look at gold. What do we got here? 27 plus minutes to go to the news. I just heard someone say something like that. All right, now let's take a look at the South African Rand right there. And it's in the 16s, which is good. It's heading down, and that usually insinuates, almost like consistently until this politics stuff got going, that gold should be up today, and it is. Last I saw, we had slid into a sell yesterday, and today we have moved right back into the buy territory. So yeah, just went into a teeny weeny little sell there yesterday. And we're in a weekly, so you wouldn't take the short anyway, so it doesn't matter. All you would do is take profits from that buy in the 1840s area or 1870s area. That's the only thing you would attempt to do, is take a little profit out of that. But you can see we're climbing back up again and threatening the 19. Now, we could try to talk fundamentals here for a moment and say, geez, if gold is being bought, doesn't that mean that the CPI is going to be bad and inflation, instead of 6.5, maybe it'll be 6.7 and people are going to be, nervous about it? Beats the daylights out of me. Fundamentals don't seem to work anymore. So you would hope that it works that way, but here we are, and we talked about this yesterday. We are, what's this? Enjoying the platform, okay, cool. If you're enjoying the platform, leave a review. But, we talk about this. We even mentioned it yesterday. If gold was really functioning on a fundamental level, when you're at 40-year highs in inflation, you would assume that gold would be, the same thing. It's basically at its all-time highs, at least for the last 40 years. And we're not even close. We're 20 some odd percent still underneath the all-time high. So that kind of negates the concept that fundamentals are working. They obviously don't. And then you could say the same thing about like silver. Silver's trading in the $24 area, and the all-time high is like $52. It's more than 50% underneath all-time highs. So obviously, you have 40-year highs in inflation, but you don't have 40-year highs of the metals, or the precious metals complex. All right, and then let's take a look at the South African Rand over here on Chicago, and we'll put gold up over here on J4X, right there. And you see that march. Up and away. There it is. And we are now, this is that, was a triangle for a while, the politics of $500,000 in cash. That's what this is all about. That's what that big move was all about. And so, we're coming, at least it's doing what it's supposed to be doing now. It's been gliding down for the last 4 trading days, which is nice. And then obviously gold has been doing the correct thing, going up basically in value over the last 4 days. From the close here, these 4 days, it's higher. Even it tried to, I guess it took out like a daily high there, and then closed a little bit lower, just happened to throw us into the sell for the overnight. But with it being in a weekly buy, you don't take those trades unless you're doing something with a derivative, like option derivatives or something like that. Alrighty. that pretty much leads us to the last currency of them all that we follow, and that is the peso, the Mexican peso. And any trader out there that would like to see a other currency, let us know. And we're breaking lows here again. These are like 3-year lows. It's which is bullish for the Mexican peso against the dollar. Another sign that the dollar is going down in value. We're seeing that everywhere across the planet. Very few places don't. As we take a sip of our tea, with 22 minutes to go to the big news, the big show. All right. Now, so there's the peso, and you can see we went to that weekly sell last week, and we've been in a daily sell there too last week, and it's just been slowly inching its way down. Even when we sent the circus south, and the head clown was there into Mexico negotiating with the president of Mexico. And he said he's going to protect the earth. Good for him. All right. That completes our currencies unless someone wants to see something in the currency universe. Now let's jump over to silver. See what silver is doing this morning. And it's lifting up too. It's been in a sell from yesterday. And you can see the weekly is flirting consistently with it right there, pressuring it. But it's only down minus 0.08. It's a very small move. And at the same time, the daily is perked its head up. Closed yesterday at 23.54, and today's high is 24. What's today's high? Today's high is 23.97. So it's like a 54. That's 43 cents. 54 and 7. 54. Yeah, 43 cents. So it's doing a decent job. It's trying to get its game on. And let's take a look at it on J4X and see what they're doing with the silver there. It's like a triangle there. It looks like a triangle. Highs, lows, bigger triangle really. There. Insinuating in many ways, if that's the 1, this is a 2. It's trying to tell us that this is going down. And maybe that's really what's going to happen is in 21 minutes we're going to see news that makes this thing move. Now, since we started the webinar, the Dow Jones Industrial Average was up only like 10 points. Now it's up 100 points. So they're slowly sliding into it. Now I guess it's in 6 minutes, they release information to the reporters. And supposedly the reporters are not supposed to tell anybody what the real number is. But they like to give them 15 minutes to be able to write about, I don't know why it has to be written instantly myself, but it sounds fishy to me. Why can't they get the news the same time we get the news, and then they can go write their articles and talk about it in 10 minutes or 15 minutes later? But no, they want them to have the news 15 minutes before us, and then they're writing articles right now about it so that in 20 minutes when they release the news, the media can release what they think about the news instantly, which seems odd to me. All right, let's take a look at copper. Copper has been looking very firm, very comfortable, following the Chinese thing. And we talked about Jack May yesterday. Jack May is now in the wind. The government of China has decided that they own his company now. And so they told him he can keep 6.2%, and they now control 94.8%? I guess that's how it works. Something like that. Yeah, I guess that's 93.8%. So they've taken almost 94% of his company away from him for free, for being a good patriot, I guess. And he got locked up by them, I guess, somewheres along the line, and now he is not. I think he's in Thailand or something like that now. He's definitely not participating. Let's put it that way. And let's see what else we got going on here. All right, And let's take a look at the platinum. Sometimes platinum can lead in different ways. Oh, look at that yesterday. They pushed it into the sell yesterday. See, I would trust this more than trusting gold or silver at this point. Platinum was sold down a little bit yesterday from that nice move up into 1100s, and it's sideways down today. So that's probably the true that we'll see how the numbers come out. They're looking for year over year of 6.5% and month over month 0. That's what they're looking for in the CPI. So we'll see what those numbers look like in 17 and a half minutes. Cool. All right. From here, we go over into the energy sector. Let's see. Where's the energy sector? And there is crude oil. And we saw that. It's trading up in the 78s. And let's put it over here again. Let's put up Brent this time. There's Brent trading in the 82s. So they're pushing that at the same time on the U.S. stuff with the basically 78.50 is the front contract. Let's see what the May contract looks like. 78.50. I'm saying it might be 79 now. So I'm looking for May to trade at 79. It's 78.99, just 1 penny off. How about that? That's what I figure. It's about a 50-cent premium now, the back month. And you can see both of them are pushing through the weekly. And let's take a look at, what's it called? Brent North Sea. Let's see what that's doing on the weekly. There we are. It's still pressuring itself down. We'll see, but you can see the green line has turned up over the last 3 or 4 weeks, so it's trying to turn, just like our weekly. You know, it had went into a weekly buy here, back into a weekly sell, back in here, right there. That's where the weekly sell really starts, right at that point where the green line is breaking through the manifold. And I'm not sure why we don't have a weekly on there. Let's fix that. There's the weekly buy. It's a real zigzag operation going on there when it comes to weeklies of late. You know, it really has. It goes in, it goes out. It goes in, it goes out. You know, went into the weekly buy right here. And went into a weekly sell right here. Right there. And right there. There we go. And there's the action. You know, it goes into a buy and it kind of goes up for a couple weeks and then it stalls out and we start to, you know, we get into a sell here at the top, you know, and I don't know, maybe we'll get back up into the 80s. It's hard to say. But that's the action in the crude. Now let's take a look at the natural gas right there. There's natural gas. It flirted with a, now it's giving us that it went into the buy yesterday. That's odd. Okay. So this morning it didn't do that. So now it's actually saying that it was in a, is that the buy? Yeah, I guess that's the buy. So it went into a daily buy yesterday. Right there. Let me just take a look how we had it. It doesn't matter. And the end result is that's what the math is saying. That's what we're going to put in there. And then let's go over to the mouse again and put natural gas up on J4X. Right there. 3.8. We were down to 3.3 yesterday. I mean, we really made some lows in there. Nice little bouncy thing going on. You see this, Robin? That natural gas is trying to turn up, I guess. I just want to, I'm going to go double check it really quick right here, right now. Right here, right now. Let's see. Right there. I'm going to put natural gas in and go to the exchange and see what it looks like. Nat gas. This is what? The March contract. There we are. What do we have here? So the close yesterday was 3.346. What are they reflecting there? 3.448. Is that right? No, that's about right. 3.382 compared to 346. Okay. We may have to try to adjust that correctly. Matter of fact, I don't think that's right. I'm seeing other data now that's... Let's see if we can fix it in front of us. But it's not in the buy. Now that's 3.8 still. But this one's bad. The 10th now is not correct at all. Huh. And then let's look at the 9th. The 9th is correct. And then the 6th is correct. Okay. There's the 6th. Right there. Actually, the 6th is missing. That's what's messing it up. Where did the 6th go? Let's see if we can fix this. It is amazing. These exchange stuff gets shifted all over the place. Let's go like that. And then let's close that. And let's do this. Reload. Yeah, there's the 6th now. They got the 6th in there. There's the 5th. But the 6th is that wrong? The 6th is wrong. Okay, so we're going to have to clean this all up. It's still in a sell. Don't shift gears there or anything like that, Robin. One caveat: Russia controls the platinum market. Is that why it's under gold now? How do they, in other words, for all those decades, platinum always traded with a big premium over gold. Now it trades at almost half the value of gold. So the Russians are knocking it down. What are they doing? Selling more than demand? I mean, that's the only way I'm looking at it. All right, we got 10 and a half minutes to the news. Now let's do this. Let's go over to that natural gas company in Spain and see what they're up to. I was surprised yesterday when it was in the 26s, I think. We'd just almost down to the 24s 4 days earlier. And now it's 26.24. And that's the weekly. Let's take a look at the daily of that. So that pressure, look at that pressure off of it. What was that? There's 1, 2, 3, 4, 5. 5 days back, it was trading in the low 24s. Look at that. 24s there. And now it's trading in the 26s. That's a big move. I did see where the temperatures are going to get cold again in Europe. So I guess every time the weather, we've been getting all that energy from the sun. Wow, the stock market has popped a little bit more since the news came out on to the media. So I'd imagine it's trying to tell us that there might be some positive, or let's put it this way: more than likely, the CPI is going to be conducive to this little rally we've just had. All right. Let's see. So there it is. There's the natural gas. That's Europe. It's the only way we can follow natural gas in Europe. What a big curve that is. Look at that. Whereas natural gas in the States, no curve. Just a little firmness there today on the daily. You can see that. Just a little firmness. But, nothing like, it basically went back in European prices. They've gone back up to that low there. It's up this high. Wow, what a tough market, huh? All right. From there, we'll go over to the stock indices and see what's going on with the stock markets. And there is the big one, the really big shoe, the S&P 500, doing that curve thing too, just like natural gas in Europe. Turning up, looking good, feeling good. Let's put it up over here. I'm going to open up the stock thing too at the same time. Intraday stock right there. Now here's the S&Ps on a day-to-day or intraday basis. That's what that is. Right there. And let's go back to the daily. Right there. And it's been in a daily buy now for 5 whole days. We are flirting really close to, look at minus 3.2, 3.1. It's very close to getting into the weekly. The little blue faster moving line, has, dotted line is through it last week. It's through it into the weekly buy already there. So we're seeing that strength, and it doesn't seem like it's backing off whatsoever. Let's see, and so you can see the S&Ps are over. Look, they're trading at 4,004, almost 405 now. So they're really pushing on that situation. Let's go take a look at the Nasdaq. Nasdaq's doing the same thing. It's in a daily buy for 5 days since that last good news that came out. And you can see here it's gone from the low 11,000s to the mid 11,000s. And at the same time, what else can I say? You see the dotted line is trying to break into the weekly buy this week, whereas on the S&P it was last week it did that. All right, let's see what we got. We got 5.5 minutes. Let's see exactly where we're at. 5.5 minutes. Let's shoot over to the intraday. And if anybody would like to see anything while we're waiting for the news, just give a shout out and we'll go take a look at it. We've got we've got 5 minutes and I guess it's 5 minutes and 10 seconds. Yeah, 30 seconds. 5 minutes and 30 seconds. And you can see here the stock market. We'll put a shorter term one in. There is the 2/3 Tesla. You see in the last 7 minutes. This is where the Federal Reserve, or the Bureau of Labor Statistics, that's what it is, Bureau of Labor Statistics, puts out the news, what the number is, right there. And look what it does. Goes up, not a lot, just inches its way up. So someone has told somebody, oh, good number. Now, we go and look at it on a longer term intraday basis right there. And let's see, let's move one of these over. It went into the sell where? Right there. And then it went back into a buy right there. The next bar. So it's been in the buy, intraday buy since right there. And we've gone from, was that 39, is that 91 or 81? It's gone from right there. It's gone from 39.90 to 406.75. So it's gone up 15 handles, basically 16 handles. So they've been doing a little buying there. The math is telling us ahead of the news that came that they're going after it. Oh, I just saw a message come through. No, nothing yet. Okay. Some internal chat going on there on Dukascopy. Let's see what's going on there. No, okay. So. That's where we are at the moment. With how many seconds and minutes left? 3 minutes. A little more than 3 minutes to go. And all we're seeing is the stock market lift. Let's find another, which, like, this is 1/3 Tesla right there. So that's kind of neat, you know. He went into the buy right there at, what is that, 403.50, and has run until up to there, 406.75. So it's nice little three handle move. And then it went into the sell right here, and then we glided down, and now we're back into a buy again with 2.5 minutes to the explosion. So they're buying it again right there. This is going to be fun because if it's a wild number, this thing, could be like up 50 points, not 4 points, If it's a bad number, it's going to be down like 40 or 50 points, but I don't think it is. But we'll see. We have, what do we have now? We have 2 minutes and 10 seconds. So it's going to be very fascinating. We could go with, this is probably like the best, I guess you'd call it the best series size, best number to play with at the moment to watch. Just showing you that. Now you can see here we just pushed into somebody came in and took some profits. They go into a sell here, and let's see if it breaks the lows here. The math it's trying to get into the buy. We'll see. The green line and the blue line, histogram, have to be in the same direction to get into the buy, and then they have to be in the same direction to go into the sell. And so we got 43 contracts, 32, 25, 16, 10, and we're back into the buy again. And look at it go. And we have, what do we got here? We have something like 1 minute and 10 seconds, but now they're really reaching for it. Look at that. And they're in the buy again right there. Just put a quick little line in there for that. Because this is going to be explosive no matter what. So the line is not going to mean anything in a few seconds. Now they're flirting with the sell, but they're not there. See? Not there. Still in a buy. Oh, look at that. They spiked it from what? They spiked it five handles. That's so fun. And we're still... okay, we're getting ready to go into the sell. Someone's going to take a profit. And we're in the sell right here now. Intraday sell with about a minute to go. And let's see what they do. This is just noise. People trying to get out of their position. So profit-wise, they're probably just trying to take profits. And then the news will come out in 20 seconds. I think it's 20 seconds. Look at that. That was a 5-handle move right there. And now it's back into the buy again. So this is mad world. Mad world. And there's the buy again. This is where you stand to the side and watch. Whoa, nice slide there. The number should be out as we speak. Whoa, there we go. And the number is obviously not what they were looking for because it dropped 50 handles or 40, about 50 handles. Like I said, it can go 40 or 50 handles in any direction. And so it went into the sell off of that one right there. Okay, and the number is, I guess the number is out. We're just not seeing it yet. Now it's back into a buy there. Gets into the sell for that. Gets into the buy for right there. And the buy right there. It seems to have locked itself down in that area. The number is obviously not going to be as good as they were hoping for. It was unchanged for the month of December. And the year over year is both numbers were, so it did not give us like a 6.4, 6.3. Okay, so what are they saying? So it did fall. Okay, so December to year over year is 6.5. It did. We were thinking it was going to be 6.3 or something like that because that indicator we showed you that has been flawless, they said. And then the month over month sounds like it might have dropped a tick. Let's see if we're seeing it up on J4X. I don't see the message yet. Yeah. So month over month, it was 0.1 minus, and they were looking for 0.0. So short term, it was just a little bit better. And you can see here it's lost about, it dropped 35, 40 handles. And you can see that pressure is, I guess what they'll do is they'll say, okay, it's not the most magnificent number. Bonds are moving up a little bit against it. You can, I see the 10-year is up 8 bips, BPSs. Okay. So that's the fun action of it all. Let's see what Giannis says. Time to start typing the notifications. One comment, you're staying longer to review it? I just did. It hit forecast. There you go. Should pop up in an instant. Yep, there it goes. It just popped up. There it is right there. Whoop, where'd it go? I just clicked on it. Wanted to read it. Darn it. Where's it at? I just clicked on it to see it. Message? No, where'd it go? Anyway, this is Doc having fun. We will catch you all tomorrow. Tomorrow's what? Today's what? Thursday, right? Yeah. So tomorrow is TGIF. It's Friday. So, what's this? Trade? I did a trade? So, what else can we say about any of this, really? This is Doc from North America saying, happy trails to you until we meet again. Look at them taking it back up. We want the market to roar, 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 roar. Let's see if we can. I'll give you a different time frame as I sing. Nope, not that one. Happy trails to you until we meet again. So it fell from here and down to here. Got that 50-point drop as we were mumbling about it. Maybe almost 60. Happy trails to you, to all our trading friends. All right, traders, we will catch you all tomorrow. Same time, same channel. S&Ps are actually plus for the day. So they'll probably close up for the day. We'll see. So, arrivederci, traders. Arrivederci. Let's see. In J4, you click on it and it sends you to the chart. I see. So, namely, you dismissed it. Darn it. I wanted to read it. Is there another button I can push to read it? Where do I push? Is there a news button? All right, we'll go through that tomorrow. Talk. Maybe you can help us out with the J4, the new J4X, and we'll take a look and see how to look at some of these tools in it. All right, this is Doc from North America again saying goodbye. Avita saying.